In this presentation, I will take you through Lunar Capital's quarterly investment and performance review for the first quarter of 2026. As is usual, we start with our disclosures and we encourage you to have a look at it at your own leisure. Our investment philosophy at Lunar Capital is basically to be owners of quality businesses with high growth potential and significant competitive advantages. To achieve that, we basically identify certain investment themes from which we create a universe of businesses that we would like to own, which have those growth potentials. So how do we identify which businesses would potentially grow and which are quality businesses? Is firstly, we look at the mega trends that are taking place at the moment. So for example, people living longer. Secondly, the changing habits of the younger generations like the millennials and the Generation Z. The pace and innovations that are taking place in technology, not only in terms of the technologies that are coming about, but also companies being able to use those technologies to innovate their products, to create more efficiencies, or to differentiate them significantly from their competitors. We also look at certain macro environmental issues. For example, the geopolitical environment, what's taking place there. We've seen, for example, trade wars recently. We also look at the markets and the valuation in the markets in which we operate. What is the sentiment? Is the sentiment bullish? Is it negative? What are the valuations like in those markets? So looking at those from those investment themes, as I said, we identify certain businesses that we would like to own. And then we do a deeper analysis on those businesses. For example, by looking at their price to earnings ratio, their return on equity, their potential for growth, the scalability of that business. Do they have a lot of debt? Would they be able to meet their debt requirements? And a variety of other factors, including, for example, the quality of management and the culture in those businesses. And from that, we identify those businesses that we would like to own, and we start constructing a portfolio based on certain guidelines. For example, what kind of assets would we like to have? How much cash and bonds would we like to have in the portfolio, etc. And then sizing, for specific companies. So in other words, where we have high conviction, we tend to be a little bit have a bit of a higher weighting for those companies, and maybe a smaller company which might be growing very fast, but might have some higher level of risk. We would have slightly smaller positions in those companies. So from those portfolios, we then basically tend to hold them for an extended period of time. And obviously, we would need to evaluate those companies as they come out with their results on a regular basis. And also look at those companies that perhaps didn't make it because of valuation reasons or some other reasons. And if there are any changes, could we bring those companies into the portfolio as well? So let's talk a little bit about some of the core investment themes that we have at the moment. So broadly, we're saying in the technology space, we are looking for those companies that would be significant potential beneficiaries of the AI drive at the moment. So for example, the factories that produce these semiconductors, the demand for that is significant. And also, we've seen a high number of countries wanting to have those fabs, in their own countries, as opposed to, getting it from a manufacturer that's outside of their countries. So we see the suppliers to those fabs as being really a big beneficiary of this AI environment. We also seen a lot of agents coming out. Coding agents, shopping agents, agents to assist pharmaceutical companies to produce research on potential treatments that can solve particular ailments. And then even in the cybersecurity space, we're starting to see, AI companies, developing technologies that can identify certain weaknesses in the security environments of certain environments, and identify how to basically address those holes. So we see those as significant potential beneficiaries of AI, and then of course companies that utilize technology, to again create more product, improve new product, the way that they service customers, etc., will also be significant beneficiaries of this. We also identify emerging technologies that are coming out and maturing and growing at a significant rate. In fact, some of them have significantly matured, like the fintech environment, and we're seeing certain really very, very good businesses that actually have come out of the fintech space. Digital-only banks like Nubank, or Meli in in the Latin American countries. So those companies are growing at a tremendous pace and are also being very profitable. So we're looking for those companies to be invested in. We're also seeing certain a big growth in the space environment, in the robotics and the crypto space as well, the medical technology space. So in those companies, in those spaces, we are identifying those companies that we would like to own or already have in the portfolio. In terms of generational needs and changes, as we've discussed, for aged people, healthcare, wealth management, aged care, are significant environments. And then digital first businesses for a newer generation. And then the retail space in terms of specific, retail companies that are highly geared, to servicing the needs, of specific generations and are growing, at a significant rate. And also in many ways, some of them for the newer generations being largely, physical as well as digital, but, the digital businesses or the online businesses are growing at a tremendous rate. We also seen at the macro level, deglobalization and reshoring. So in other words, countries wanting to bring back manufacturing, into their own environments, identifying sources of supplies, within their own countries. So those are also opportunities that we see, and of course that will mean that there's a demand, for resources coming into those countries, for fabs being developed or factories being developed in those countries, and of course, the more manufacturing, gets built around the world, there will be a higher usage of robotics, and similarly, we see that the opportunities for us would also to have higher levels of geographical diversity within our portfolios. The pace and the demand, for energy is significant, and many countries, have gone into, the renewable space and developing significant improvements in battery technologies. But the demand for oil and gas, continues to be very high as well. So we see, opportunities specifically in those sectors as well. And then largely from a macro point of view, we identify, as I said, the valuations in the market, and we also talk about a K-shaped economy, okay, where the very wealthy continue to spend and buy expensive products, whereas people at the lower end of the economic spectrum really struggling to meet, and intending to buy, lower and being more cost effective in the way that they buy. So all of these provide us with opportunities, for us to be invested in. And I've listed, in that some of the potential investments that we already have in the portfolio or that we are currently looking at. So to give you a sense, in the Lunar BCI Worldwide Flexible Fund, just to give you a sense of where we are invested, 36% of the portfolio is in US equities, 10% in European equities, 11% in emerging markets outside of South Africa, and then in South African equities, we have about 15.5%. In terms of cash across the piece, we are a little bit more diversified about where we've invested our cash, but you can see, about 18% in USD, 4% in euros, and then 6% in South African rands. So giving you a total of about 28 odd percent in cash. So a very conservative portfolio, diversified across regions, but also having a very high cash positioning. And the main reason for that is we do think that markets are not pricing significantly, the longer term impact of the crisis that's taking place, in the Strait of Hormuz at the moment. So in terms of the themes, you can also see we have some level of diversification. So playing, in the beneficiaries of AI, about 41.5% of the portfolio is in those stocks that we believe can be beneficiaries of AI, about 18% in emerging technologies that we talked about 43% of stocks. And remember, some of these stocks play across. So for example, there might be a stock that plays the generational, but it also uses, let's say AI technology. So you might see a bit of double counting. So these do not make up 100% of the portfolio. And we actually like those companies that can play across multiple themes. Okay, so 43% in generational changes, about 39% in the deglobalization and in changing world order, 7% in climate and energy change, and 54% in the valuations, and the K-shaped economy. So, we play across the themes as well quite significantly. Sometimes we have a lower valuation, a lower weighting in some of these because once we see the demand, for example, for energy continue to grow, the opportunities might not be there primarily from a valuation point of view rather than anything else. So this picture also gives you a sense, of where we are invested in. So, for example, the blue columns represents the cash, which we talked about. The orange ones represent the technology investments that we are in. The green one is in the investment in the investment space, and the red one in the financial sector. So you can see, again, a nice level of diversification in the type of companies that we have, but also, in the sectors that we are involved in. Now, the fund's performance, for the 1 year is 5.1%, which brings us into the third quartile, of the Lunar of the Worldwide Flexible Fund CISA category. Now, the main reason for that is that we have been conservatively invested, and the markets have continued to run despite our view that the markets are overvalued. We continue to believe so, and as these opportunities, of companies that we want to be invested in, as their valuations do come down, we certainly would be deploying, more of the cash. Over 3 years, we've given an annualized return of 12.5%. Over 5 years, 8.8%. Over 7 years, an annualized return of 10.76, and over 9 years, which is the longest period that we are, 9.5 years. So 9.5% per annum. So that basically gives you a sense, of the performance of Lunar Capital. Now, if we compare that to what's happened in the market, the JSE actually rose quite significantly. To 28, by about 28% over the period. The S&P 500, which is the US stock, 16%. The MSCI World Index, 17.5%. The ZAR, minus 7%, and Lunar, 5%. So if you compare, for example, us against those, we have underperformed, but obviously one has to adjust, the S&P and the MSCI, by the changes in the rand, because our portfolio is measured in rands and those are in US dollars. But even then, we basically, have underperformed those by about, 5% 4 to 5%, depending on which one you look at. Okay. Again, the main reason, largely with our higher positions in cash, and we believe that was the right strategy, and we continue to believe the higher cash position will help us, as the opportunities do come about. So what's our outlook? Okay, and that kind of talks quite nicely to where we are. So basically, obviously, the US and Israel, war against Iran, and the closure of the Strait of Hormuz. Our view basically is that the war is still not over, and it is likely to drag on for longer. But it is in the interest, of all parties, to come to a conclusion, fairly soon. But the impact, of the closure of the Strait of Hormuz will be higher, oil and gas prices, but also other industries will be impacted by this closure, which includes, for example, the semiconductors industry, because, helium, is one of the products that basically passes through the Strait of Hormuz, and in the agricultural space, fertilizers as well. And then companies that require oil derivatives, for manufacturing, will also be impacted. Again, when we look at these things and we're saying, this has to result in higher inflation, which results in higher interest rates, which basically results in revaluation of bonds and equities. So we are of our view is that bonds and equities will be impacted if inflation is higher, because interest rates will need to be higher to counter that. But saying that, at the end of the day, certain equities, certain sectors actually do like higher levels of inflation, and we will continue to be invested in those. But we will also create higher levels of diversification in the portfolio. On the technology innovation side, we believe that benefits and risks, there are both benefits and risk related to AI. And as discussed, we're seeing good use cases, and we think that that's going to continue to grow. The demand for memory and computing is high. The reshoring of fabs provides us with significant opportunities. The area that we're very excited about is the fusion of AI and robotics, which will provide significant advancements in how these robots operate, and the tasks that they can do. And we see there being potential investments as these come about as well. We do think that there's a risk of overcapitalization in the cloud businesses. We've seen some of the impact on software businesses through AI being impacted. In some cases we think it's overdone, but in other cases we think it's justified. So we don't take a one brush painting approach to all of these investments. We talked about fintechs, and the space area is hotting up as well. We're probably going to see some IPOs in the space and the AI space. In our view, we will probably not buy into IPOs because we think that they, are hyped up in terms of valuation. So we would rather wait and see how these perform, and identify those businesses, that perform well over the long term, potential long term, that we would then be invested in. So that's it from us. Just to remind you, our core is about learning. We like to share our ideas. We continue to learn ourselves, through various means. You can identify, some of the postings that we do by going to our website, which is posted there, and you can subscribe, to our blogs and our weekly takes. If you think somebody else is interested, please send that to them as well. The two products that we have is the Worldwide Flexible Fund, and then we also do direct offshore portfolios for clients. And if we think that, if you want to continue to have, offshore exposure, we've got a reasonable track record in the space. Importantly, myself and my team, are all invested in the funds. So we invest like owners and not like short-term traders. Thank you.